Hi there, QuickBooks experts. I hope all is well, and I pray that as you are viewing this video, that you're in the best of health and spirit. In this video, we're going to cover Chapter 5, Recording Operating Activities, Purchases, and Cash Payments from QuickBooks Online for Accounting 2026. Upon completion of this chapter, you should be able to, you should already know how to add a vendor. We've done this in previous chapters. We'll learn how to record a purchase order, record a bill for receipt of products and services on account, record the payment of bills, record credit card charges, record checks, and prepare a trial balance. So in Chapter 4, we had the privilege to learn how to add new accounts, new customers, new vendors, new products, and new services to the Wild Water Sports Company. In addition, we recorded operating activities like sales receipts, invoices, cash receipts, and bank deposits. And as we learned, there are three major activities for every business. We have our operating activities, we have our investing, and we have our financing activities. So we related it to our personal life. In our everyday life, there are some things that we continually do. We get gas, we pay for groceries, we receive our paycheck from the job that we are working, or if you are self-employed, you receive revenue. So that is essentially a part of operating activities. And then we have investing activities where we make those long-term purchases. We think about purchasing a house, going to school. And then lastly, we have financing, the way in which we fund those long-term visions. So in this chapter, we're going to do some more or add some additional operating activities to the Wild Water Sports Company, things such as purchase orders, bills, payments of bills, credit card charges, and checks. So to verify the accuracy of Wild Water Sports Company, again, the most important thing when you are building a house is the foundation. Same thing stands true as you are going through Wild Water Sports. Before you can move on to a next chapter, it is imperative, very important, that you ensure that the trial balance is accurate, because if not, then you are building on a faulty foundation. So the first step is asking us to sign into the QuickBooks Online account. I am already signed in. So the first thing we're going to do, we're going to click reports, and then we're going to go to our custom reports. And we're going to change the date to January 1st to January 13th. And the first thing we want to do is to ensure that the trial balance ties, and we compare it. So we see our checking account. The first thing that you typically always do is check the totals. So I see my total debits and total credits tied. So we're good to go. And then the next thing we do is we compare all of the accounts individually to ensure that all of the accounts are correct. So based on my quick overview, it appears as though everything is good to go. So now we move on to the next page. And again, anytime you're struggling with anything in QuickBooks, they have the support videos that you can utilize, the video tutorials that can teach you how to do certain things. So in this section, we're going to be adding new vendors, and it states to recall that vendors are your company's suppliers of products and services. And just like in our everyday life, whenever you purchase something, there are three options. You can pay for it right away, you can get the item and pay for it later, or you can pay for a portion of it now and then a portion of it later. So in order to add vendors, we're going to use the expenses menu item in the navigation bar. And again, as we know, there are some differences. So this is the new setup. I just want to always make sure that you understand that this is the brand new setup, or the new interface rather, for QuickBooks Online. In the event that you are seeing this version, this just means that you're using the old interface for QuickBooks Online. There's just a few differences, but ultimately same program, just obviously, it has a new makeup, a new interface essentially. So in the event that you are seeing this interface when you log in, you can go to your gear icon, and then you can choose to try a new version of QuickBooks, and you can switch to the most updated version, because the old version is eventually going to be discontinued. All right, so with that being said, we go back to our navigation bar, we go to expenses, and then from there we click on vendors, and then we click on new vendor, and the name of this new company is Tig. Then we're going to type in the address, so we'll scroll down to the address, and we have 1801 TX Highway 36. And I mean, you guys know me, I'm all for the shortcuts. Within reason, obviously. All right, so we type that in. We have the state, which is Texas. We have our zip code 79602. And then we're going to select net 30 from the terms box. So as we scroll down to the additional info, we select payment. We give them 30 days ultimately to pay. And then we click save. So we've now added a new vendor. And if we need to edit a vendor's information, we can just go back to essentially where we just was, or where we just were rather, expenses. We click on vendors and it'll show us a list of all of our vendors. And from there, we'll select tag. We'll click into tag rather, and then we can select edit and edit any information that is necessary. So now we move on to purchase orders. So a business uses purchase orders in order to formally order products or services from their vendor. So think of it like a receipt, right? Or an invoice, rather. When we provide services to a client, we provide invoices, we provide receipts, depending obviously on the method in which they pay us. But that ultimately outlines what was provided to the customer. In the same sense, a business, when we are purchasing products or services from vendors, that is essentially what we use a purchase order. So purchase orders are also used as a reference and control for products received. During the creation of a purchase order, you can create a new product or you can refer to an existing product. Purchase orders, they can be used to acquire inventory for future sale or for products ordered for a specific customer. So to create a purchase order, we're going to go to our navigation. And we have two options. As you know, in QuickBooks, there's more than one way in which you can create something. So instead of plus new is in the older version. You can select the add new. So in this icon here under vendors, we can go to purchase order. You can type it in, purchase order. All right. So again, there's more than one way in which you can do different things, or the same thing rather, in QuickBooks Online. So we selected create purchase order and we are looking for tag. We've already created this vendor. The date is 01/14/2027. And we're going to select tag from the product service text box. So it's not going to be a category, but it is going to be an item. So in such case, the tag 2025 ZX. So in the event that, let's say we paid for services. So let's see if they have an account for that. Okay, perfect. So let's say we paid an accountant. So in such case, for the accountant, that is where we would input the category. It's not an item. It's not a tangible item. But when we are dealing with a tangible item, that is where we are going to go to item details. So let's say in the event that you are preparing this purchase order and you do not see the item section as I just saw. So let me just quickly go back so you can see what I'm referring to. So if when you get to the purchase order, you only see category details, you do not see the item details, there is a setting for which you would need to make an update. So we go to our settings. We go to our accountant settings. And then from there, we go to the expenses tab. We select edit, and you need to make sure that this is on. So where it says show items table on expense and purchase forms, we need to make sure that that is on. So if I were to check this off, I select done. So you'll see if I go to the purchase order, oh, it still shows, I guess because it's already there. All right, so it's not going to work since the feature already showed. I would probably have to reset my cookies and all of those things. But again, in the event that when you get to the purchase order, the items setting is not there, again, you go to your gear icon, you go to account and settings, you go to the expenses, and you want to, yeah, it turned it back on. All right. So you want to make sure that the show items table on expenses and purchase forms, you want to make sure that that is toggled on. All right. So we'll jump right back into it. Purchase order. We are purchasing from Tide. The date is 01/14/2027. And we're purchasing, or the Tide 25ZX. We're purchasing one. So we see the rate is $180,000. So we select save and new. And then from there, we're going to add new from the vendor box. So we are going to add this new vendor name, Centurion Bolts. We're going to scroll down, add the new address. Grogan Avenue. Merced, CA. Zip code is 95341. Right, and then the terms are going to be net 30. And then we click save. And the date for this purchase order is going to be January 15th, 2027. And then in this case, under the product service, and then you also see the difference on the category details is category, and under the item details, we have product service. So we're going to type in the Centurion VI22, and we're going to click add new. And this is going to be an inventory item. So we make the update. The category is going to be boats. And we're going to type 0 as our initial quantity on hand as of 01/15/2027. And then our inventory asset account is going to be inventory. You scroll down, and I'm going to do the shortcut. We can input the description for the sales and for the purchasing. And then we're going to type $115,000 as the price that we are going to sell it for. It is going to be subjected rather to the taxable standard rate. And the income account is going to be sales. The purchase cost is going to be $90,000. And the account for the expense is going to be cost of goods sold. And it doesn't tell us anything about the preferred vendor. So we would leave it as such, and then we were going to select save and close. So we type 1 in the quantity. Typically, it automatically chooses 1. And the purchase order number is going to be 1002. And it doesn't give us the information here. Let's see if this will update it. All right, so we have purchase order 1002. That doesn't seem to update it. All right, well, it doesn't really make a difference. Oh, perfect. It'll automatically be 1002. All right, because 1001 is the first one. Perfect. So you click save and new. And now we have another purchase order from Tig. And we're going to be adding a new purchase order. So in such case, we see that it, opened up the previous one, but we are going to be adding a brand new one. So save and new. And let's scroll back up. Not sure why this is automatically popping up, but we're going to remove this. Let's see if it shows us. All right, perfect. Yep, so we're going to remove that. I don't know why it's automatically popping up. But they are purchasing a Tig thruster control package. And we're going to add new. And as we know, this is also an inventory item. It's going to be 0 as of 01/15/2027. The inventory account is going to be asset. And then we're going to enter the name for both sales and purchasing. It's going to be $25,000 for the price and $20,000 for the purchase cost. And we're going to update. This is going to be sales part. So we're going to have to add new. So in such case, the account name is going to be sales part. Part of income. Sales of product income. Then we'll just update the description. Then we select save. So sales part. We accepted the new income account. We have our cost of goods sold. And then from there, we're going to select save and close. So for this purchase order 1003, so again, it's automatically going to save as such. Oh, let me see. This one didn't save. So let's update this one. This one automatically saved for some reason. All right, so let me update this. So tie, thruster, can throw. Perfect. All right, so this is what our invoice should look like, or our purchase order rather. And now we click save and close. So we added 3 purchase orders thus far. So let's see, one is missing. Okay, nope. So purchase order 1001 is for Tig, and then the other is from Centurion Boats. Perfect. So we've just added 3 purchase orders. So again, the purchase order number automatically saves, so you are good to go from there. So in the previous chapter, we created invoices to customers for products and services rendered. That invoice served as a bill because ultimately you provided a service or you sold the product to a customer and they did not pay you right away. So in such case, it's your money. You want to receive your money. So therefore, the invoice represents the accounts receivable, the amount that the business is expecting to receive because they sold the product or provided a service. So that invoice serves as a bill to the customer, signifying a sales transaction for you and a bill to them. Likewise, when you enter into a business transaction, such as purchasing a product or service from a vendor, you expect them to send you an invoice. In QuickBooks Online, the invoice you receive from a vendor is called a bill, right? Because obviously, when you send the invoice to a customer, you want them to pay it. It's a bill to them. Vice versa, now the business is wearing the other's shoe. Ultimately, they receive an invoice, therefore they have a bill to pay. Bills are recorded in QuickBooks Online to signify the receipt of a product or service and a related liability, usually accounts payable. The inventory account is affected when a bill represents a product being delivered. In QuickBooks Online, the terms of those bills could be one of the following. It can be due on receipt, meaning once you receive that invoice, you need to pay it right away. It could be net 10, net 15, net 30, or net 60. The net reference means that the bill is due to be paid within a specified number of days. For example, 10, 15, 30, or 60. So many of the examples that we've used thus far, it's net 30. So the vendor has 30 days to pay, or the customer rather has 30 days to pay. Other terms, for example, if it's 210 net 30, if they pay within 10 days, then they get a 10% discount. Otherwise, they're going to need to pay the full amount in 30 days. So even if we set up such terms to appear on invoices to customers and bills, QuickBooks Online does not calculate this automatically. So in order to simplify the learning of QuickBooks Online, discounts are going to be used. In this section, we're going to focus on recording a bill for the receipt of services and products on account, meaning we will have been given terms. Usually it's going to be net 30, so we don't need to pay the bill for 30 days after the bill date. And typically this happens in our everyday life, right? I receive my bill for my phone bill, my mortgage, they give me an extra 15 days to pay without a late fee. All of my utility bills, ultimately, they'll give me the bill on a specific day, and then I have several days after to pay it. So we see it in our everyday life. The first bill is going to be for a product received, which was previously ordered using a purchase order. The second bill is going to be for a new product, which had not been previously ordered using a purchase order. Both of these purchases are going to affect inventory, and they are going to be recorded in the items details section of a bill. The last 2 bills are going to be services that were rendered, and they are not going to affect inventory, and they are going to be recorded in the category details of a bill. So to record a bill from the vendor, we're going to go to plus create or plus new, and we're going to click bill under vendors. And then we're going to select Tig as our vendor. We're going to accept the net 30. The date is going to be January 18th, 2027. And we're going to collapse the category details. We're going to expand 01/18/2027. All right, we're going to expand the item section. And then we're going to add a bill to the section. So we see we have purchase order 1001 that's open. So we open this. or we add rather. And then we see that it adds it. So now the bill contains information from purchase order 1001. And it's basically letting you know that if there's any trouble, if the information provided in a product service column is cut off or not visible, you can basically just place your cursor and drag it. So what it's telling you is that you can, drag this, expand it. So, you can do it for any of the columns pretty much. All right. So we scroll down, everything seems to tie. So we select save and new. And now here we type in Malibu boats. And we're going to select net 30. I'm not sure if I did that for the previous one, but I'm going to double check in a few. The date is already there. And we're going to select add new on line 1 of the bill product service. And we're going to add a new product as we've done before. The name of it is a wake accessory. Add it. And this is going to be an inventory item. Wake accessory package. All right. The initial quantity on hand is 0 as of 01/18/2027. The inventory account is going to be inventory. I'm just going to copy and paste this. And we know that this is going to be taxable at the standard rate. The income account is going to be sales parts. The purchase cost is $350. So I'm kind of, doing it out of order. So the wake accessory package, the price is $500. The purchase cost is $350. The expense account is cost of goods sold. It's taxable at the standard rate. So we select save and close. And the quantity is not going to be 1. It is going to be 5. And then from there, we select save and new. Then we type in Best Buy Geek Squad. And we add that. I'm just removing this because this isn't actually person's name. So we save it. We're going to select net 30 from the term. The date is going to be January 19th, 2027. And then we're going to expand the category details. So we collapse the items of the item, and now we open it for category. And we're going to input equipment rental. All right. So key thing, when it affects inventory, we use the item details. And when it does not affect inventory, it's going to be category details. So we're going to type $6,000 for the bill amount. And this is what it should look like, which it does. So from there, we select save and new. And then next, it is going to be Allstate Insurance. We select net 30. We're racking up these bills, as you can see. And in the category, it is going to be prepaid expenses in our category section. And then the amount is going to be $2,500. And this is what it should look like, which it does, and we go from there. So we select save and close. So all bills that have been entered, they increased an asset or an expense account. Inventory purchases were recorded in the item details section, and they increased the quantity of those products so long as they were originally set up as a tracked product, which we are familiar with, creating products and services. And equipment rental was recorded as an expense, and the prepaid insurance was recorded as an asset, prepaid expense, because those purchases, those bills are not related to inventory items, hence why we use category and not items. So all bills, they ultimately increase the accounts payable liability account, because when you have a bill, you got to pay it. So now to this final section. In this section, we're going to focus on recording the payment of a bill for the receipt of services and or products on account. We are going to record credit card charges or recording the payment by check for other items. So we're continuing where we left off. We're going to close out of the bill, and we are going to select plus new, and we are going to select pay bills. So there's a listing of possible bills that can be paid. So we could pay Malibu boats, We can pay Tide, we can pay Allstate, we can pay Best Buy Geek Squad. So we're going to select checking as the payment account. We're not paying cash, we're using our checking account. The payment date is going to be January 18th, 2027. And then we're going to type check 1001 as the starting check number. So this is ultimately what we see. And then we're going to click the due date column to sort the bills by due date. So we sort them by due date. And we see that we, have this bill for Malibu Boats. So the first thing we're going to do is click on the bill for Malibu Boats, that $56,000 that is due. And we are going to select save and close. So one key thing to keep in mind is that into it, they've added a new column to the screen titled the status, and that basically calculates the number of days before the bill is due. It's going to use the computer's current date, which obviously is going to be a little different, but same thing. You ultimately see how to pay a bill. So you select plus new, pay bills, and it shows you a listing of all of the bills that need to be paid. So often whenever a vendor, they give you no terms, that basically means that they want their money. So these terms are called due on receipt. So for example, a credit card charge for fuel or a check for supplies. And in order to record these transactions, we're either going to use the expense task or check task after clicking the plus new or plus create icon. So in order to record a credit card charge or payment, we are going to do the following. We select the plus create. We select expense under the vendors column. And we are going to select Chevron. And we see that this is a new vendor, so we're going to add it. And then from there, we are going to select save. The payment account is going to be MasterCard. And we're going to add new MasterCard, and this is going to be a credit card. And we are going to select save. The date is there, January 19, 2027. And then we are going to select credit card in the payment method box. Well, the MasterCard is already there. And then we're going to select vehicle, gas, and fuel. And then the amount is going to be $1,600. So this is essentially what we should see. The date, payment method. This is where we update for credit card. And then we're going to select save and close. So that's if we were to pay a credit card. In this case, we are going to use a check. And by using the check, we are going to type in a check for Verizon. We're going to add new. We are going to select save. And then we're going to be paying it from our checking account. And then we're going to accept check number 1002 with the payment date of January 19, 2027. And our category is going to be phone service. And the amount is $1,800. Then from there, we select save and close. So the work that we completed in this chapter, it had an effect obviously on the company's trial balance. We recorded several bills, we paid bills, we recorded purchase orders. So we are going to create a trial balance, and this is going to help us to investigate the checking, the inventory, asset, and accounts payable. And in the process, we're going to realize that purchase orders do not affect the company's account until the products are received or services or rendered. So the first thing we're going to do, we are going to go to our reports. We're going to click our customer reports. We're going to click on the trial balance, and then from there, we are going to change the date to the 19th. And we want to see what's happening. So again, the first thing we always do, we double check the total debits and credits balance. So we see, all right, perfect, everything ties. And then we want to check all of the accounts individually to ensure that they line up. So we see our checking, accounts receivable, inventory, payments to deposit, prepaid expenses, equipment, original cost, cost of goods sold, rental equipment, phone service, and vehicle. Everything is good to go. So our debit side is good. Now we check our credit, our accumulated depreciation, AP, MasterCard, sales tax, long-term business loans, common stock, opening balance equity, retained earnings, sales, and service revenue is good. So everything ultimately ties out. So it's asking us to click the checking account balance of $22,345. And when we do, it basically shows us all of the examples. So it's asking us to switch to the classic view. All right, so you have those options. You can either utilize this new version or you can switch to the classic view. So let's see. All right, is it giving us the option to do such? Ah, here we go, top. There we go. So it shows us for us to switch to the classic view at the top. And this is basically, just showing us what it looks like. The same thing, still shows you the same thing ultimately. All right, we have the beginning balance of 25,000 and there was a decrease of 2,655. So now our ending balance is 22,345. So now it's asking you to print it. Again, you can print. You can save it as a PDF or you can print the physical copy. You can email it to the client. You can also export it as an Excel or as a PDF. And then the next thing is asking us is to click on the inventory account. We want to make sure that everything that is listed here is ultimately what we see in our transaction report. And again, you can switch to the classic view. And then again, you can print it, you can export it, and it's asking you ultimately to do the same thing for accounts payable. All right, so this brings us to the end of chapter 5. And you, again, before you move on to chapter 6, you want to ensure that your trial balance report matches the one shown above. And you can create a detailed transaction by a core account, a report rather, to locate any discrepancy. So in this chapter, we added vendors, products, purchase orders, bills, payment of bills, a credit card purchase, and a check payment. We also produced the trial balance and drilled down in the trial balance to see the effect that bills and payments of bills and how they affected accounts. In the next chapter, we're going to work with investing and financing activities. So this brings us to the end of chapter 5, where we are recording operating activities, purchases, and cash payments.